Good morning and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends, and most importantly, we'll be answering your queries later on in the show. But before we kickstart, let's see what the global handover looks like. If you look at European markets, they retreated yesterday a fair bit, having struggled to build positive momentum so far this week. Stoxx 600 slipped 0.5% by early afternoon, having given up earlier gains. DAX shed nearly 2%, while CAC ended over 1% lower. Inflation in the UK hits a new 40-year high as the consumer price index rises to 10.1%. US futures marginally lower after Wall Street ends with cuts. Dow snaps its 5-day winning streak after the FOMC minutes reaffirmed likelihood of a 75 bips move in September. US 10-year yield rises to 2.87% as the Fed maintains its hawkish stance. Stocks in Asia Pacific trade in the red following a weak handover from the Wall Street. For our own markets, SGX Nifty signals a weak start. Stocks in the spotlight today: Natco Pharma, ONGC and Sona BLW. And as several new NFOs hit the street, we decode if mutual fund investors should bet on them. All right, let's get started and talk markets. More importantly, the technicals with Gautam Shah. He's joining in today to help our viewers with their queries and also give us a sense of how the markets are poised. Morning, Gautam, and thank you so much for taking time out. Weekly expiry, what do we expect?
Good morning. Well, I'm not very sure about the weekly expiry because there are games being played every Thursday. But I think from a bigger picture perspective, the key takeaway is the kind of gains and the kind of run-up that the markets have seen. And no level has been able to really stop the Nifty, which is phenomenal. I mean, this just reminds you of the heydays of late 2020 because corrections have been very, very shallow. Participation has been excellent. Momentum has been just picture perfect. And the market enjoys leadership from multiple counts. So I think the going is still good. One should not fight this uptrend, which I think is the most important takeaway, at least with what we have been sharing with our subscribers at Goldilocks. And I think 18,100 and 18,400 are numbers where the market could find a bit of a pause. So as of now, things are okay. There is further upside. There could be a little bit of a pullback sometime in the next 5 to 7 trading sessions, but nothing materialistic.
Okay, all right. Let's talk about some individual names that could be, in the limelight today on back of news developments. But before that, I also want to understand your assessment of Bank Nifty. What are the important levels to watch there?
See, the Bank Nifty has taken leadership. I think that's the clear takeaway with what has happened in the last 6 weeks. Because I think a month and a half back, you had a scenario where some of the other names in the market were taking the Nifty higher, but now it's just the banks. From 32,500, we are at 39,000 plus. So I think there is more upside because the participation had got better. Earlier, it was just ICICI and SBI that was taking the Bank Nifty higher. Now you see HDFC Bank performing after a very long time, which I think is a very positive development. And clearly, there is a lot more upside scope there. So our working target on the upside for the Bank Nifty is about 41,000, but that's going to take some weeks. From a shorter term perspective, it's a little overbought. So I don't think you should be taking any aggressive longs here. But on any dip towards the 38, 300, 500 is where fresh commitments can be made. But as I've said a few times in my recent interactions, this is a market to go bottom up. So look at stocks and ignore the indices.
All right. Let's talk about some names as well from, individual standpoint. ONGC is the first one that I want to flag off. They've signed a pact with ExxonMobil for deep water exploration in both east and western coasts. The collaboration area's focus will be on Krishna, Godavari, Kaveri basins in the east and Kutch, Mumbai region in the west. So some developments taking place here. Let's talk technicals. What is the chart telling you? And how is ONGC poised?
Actually, not a great chart setup because ONGC has been one of the underperformers in the PSU basket in the last few weeks. While there could be some uptick in the near term, I don't think there is an actionable trade here. But I think the PSU basket we absolutely like from a 6 to 12 month perspective. And if you look at some of the other names, whether it's at Coal India, NTPC, Power Grid, PEL, BEML, HAL, I think some of these stocks have phenomenal setups. So stay with the stocks which are exhibiting relative strength. Unfortunately, ONGC does not fit the bill. But yes, other names which I mentioned, investors can definitely look at it from a medium-term standpoint.
Okay, thanks for flagging off some of those names actually from the PSU space. Let's turn to pharma. Natco Pharma could be in the limelight today. It's got a tentative approval from the US FDA for ANDA for a chemotherapy drug. Now, this is called trabectedin injection, for which it's got a tentative nod from the US regulator. But if we look at the technicals of Natco Pharma, Gautam, last 1 month, it has seen a good momentum, but hasn't been able to hold on to it. What lies ahead?
Yeah, it's been one of the bigger underperforming names in the pharma space. Pharma itself as a sector has clearly been the worst performer in this entire recovery that we've seen in the last 6 weeks. And therefore, you shouldn't be fighting the trend. You shouldn't be committing serious amount of capital in pharma. There are a few names in the pharma space that can stand out, like a Sun Pharma, a Loris, which have done very well in the last few weeks, and I think they can continue to run. But the other underperformers, including Natco Pharma, it's best avoided. Why work hard when you have such a wonderful trend playing out in so many other sectors like capital goods, FMCGs, and autos? So I think pharma is basically an avoid for me, apart from the two names which I mentioned.
Okay, all right. What about auto? Because the next stock I want to flag off is Sona BLW, and this is a CNBC Awaaz story which they had reported saying that Blackstone is likely to sell Sona BLW shares worth 4,000 crores in a block deal. So this story is something that could keep the stock very much in focus. And if we look at the 3-month chart, Gautam, of Sona BLW, very, very wild move seen there, very divergent. Is the trend going to be equally volatile from here on, or do you see a steady momentum building in?
See, 6 months back, auto ancillary and this entire EV theme space, I think, was huge. Just about every stock in the market did well. It was a little overdone as well, and there were great talks about Sona BLW. But now, if you look at the last 6 weeks, it's just been a non-performer. And so many of its peers have actually done so well in the same period. Maybe this deal wasn't sort of an overhang the way I want to look at it, because fundamentally I hear from my analysts that all's going well with the company. So maybe post the deal, there could be a sort of a recovery because the stock is at a long-term support. So investors with a slightly longer-term horizon can definitely look at this name. I think it has the potential to rise. But if you're playing momentum and if you want to trade, I would recommend some of the other, EV theme stocks which are still doing very well.
Would you like to highlight any of those stocks in the EV theme or even in the overall auto universe? One of our viewers is just writing to us real time and wants you to tell him what the chart of Ashok Leyland looks like. But other than that, any other names also if you want to flag off?
See, most of them are already run up. I think case in point being FIEM Industries, FIEM Industries. What a spectacular run up that stock has seen, 50%, I guess, in the last few months. But if you want to really stay with the EV theme and the big boy in the auto space, I would say Tata Motors. I think it's very well placed for significant upside from current levels. Our working target is about 530, and then possibly at some point of time, it could even hit a 600. So I think at this juncture, keeping the risk reward in mind, and given the fact that other stocks have already run up, I think Tata Motors offers the best risk reward. It also offers safety in case the market sees some sort of a correction.
Okay, all right. Gautam, request you to stay on with us while we call out some viewer queries for you. Meanwhile, I want to turn to my colleague Kaizad Adajania, who is joining us to talk about mutual fund houses that are making a beeline to launch new schemes. They're making a big comeback, these NFOs, and last 1-2 months, since July 1st, when the SEBI cap was removed, a lot of them have trickled in. Kaizad, thanks for joining in, and tell us, what's spurring this barrage of NFOs into the market? What's driving this, and what should investors do?
Hi, Karunya. Good morning. So, you answered the question partly in your question. There was a lull of about 3 months. There was a ban on NFOs by the market regulator for about 3 months because there was a process in the way the online brokers and the mutual funds collected money from investors. That needed to be put in place, the new process that SEBI had mandated. So SEBI had also said that till you put the new procedure in place, you cannot launch any NFO. So there was a lull of NFOs for about 3 months. And after the ban was lifted on the 1st of July, we saw a rush of NFOs coming in. So obviously, I mean, mutual funds have been launching NFOs for time immemorial, but especially since 2018, since the new categorization norms came in place, where SEBI said that you can't have more than one category, one scheme per category, and there were about 36, 37 categories. Many mutual fund houses over a period of time, when they restructured their internal portfolios, they realized that they may not have some schemes in some categories. So they are partly the reason why you see so many NFOs being launched is that they want to fill up their product basket. That's one. The other reason is obviously you see quite a lot of new fund houses being launched, like White Oak has been launched. Navi Mutual Fund is going through. I mean, after they acquired SL Mutual Fund, they've also been launching a lot of passive funds. So that's also one reason why you see new funds being launched, because when new fund houses launch, they want to obviously fill up their product basket at the quickest. So that's also one reason why NFOs are being launched by dime a dozen. The third reason, obviously, why you see so many new funds is basically it's psychological reason. The age-old psychological reason is that it's easier for fund houses to sell new funds because they are new, they are available at 10 rupees NAV. It's easier to sell because it's a policy, but it's a pitch that basically it's easier to be sold to investors rather than selling existing funds whose NAVs come at a very higher level. So that's the reason why you're seeing so many new funds out there in the market.
Okay, all right. But as an investor, what should we watch out for, and how do we know which one is the right one for us, or how do we assess them?
So Karunya, between a new fund and an existing fund, we always at Money Control advise investors to go for existing funds because existing funds come with a track record, they come with a vintage, they come with a performance track record. You know how the fund has been managed, you know who the fund manager is, you've been tracking the fund for a long time, you know what the portfolio of the fund is. So there is a way to analyze how this fund has performed through market up cycles and down cycles. So you have existing funds come with a history, they come with a track record. It's easier to see how this fund has performed in different market levels. So between a new fund and an existing fund, a new fund does not come with a history. You don't really know what the new fund is going to do. I mean, of course, the new fund has a sales pitch, they have a strategy, they have a portfolio, as in maybe they have a model portfolio, maybe not, but at least they have a strategy. But you don't really know how that new fund has performed over the market cycles. When you have so many existing funds out there in the market across all categories, we always recommend you to go for a new, an existing fund which comes with a track record. In fact, at Money Control, we also have a product called MC30, which is a curated basket of 30 investment-worthy mutual fund schemes that we recommend to our readers. And we make these funds go through multiple hoops, multiple checks to make sure that we give you 30 of the best investment-worthy funds out there in the market. But if at all you want to look at a new fund, then you should only look at a new fund which gives you a new theme, a new idea, something that your existing funds don't offer, or maybe a new fund house which comes with a different approach, which sounds a little more exciting, which sounds a little different. Only then you can go for a new fund. And whenever you want to go for a new fund, don't invest a lot of money in the new fund. Start by investing very slowly. Check the performance, keep checking the performance over a period of time, keep checking the portfolios over a period of time, that, if they're sticking to their mandate. And only if you're convinced that the new fund is on its path, then you can eventually start investing a little bit more and more and more as time goes by. But between a new fund and an existing fund, by default, always choose an existing fund that comes with a track record.
Okay. Thank you so much, Kaizal, for joining in and for helping us understand what's happening in the NFO space and how to go about navigating it, how to pick the right funds for you and whether or not to invest in them. All right, let's shift gears once again and get back to markets. Gautam Shah is standing by. A lot of questions coming your way, Gautam. First one I want to address is from Vish, and he wants you to flag off some PSU banks. If any of these names look attractive to you, are there any where investors could dip in right now?
It's just human tendency to get attracted to low price stocks. I think we've seen this in the last many, many years, and there have been so much talks about these low price PSU banking names, something that we have never liked and never recommended because they just falter, every single time. So I do agree that banking and PSU banking is a theme. The fact that SBI is now trading at lifetime highs, I think is enough validation, and it still looks great. I think every investor needs to have SBI in its portfolio. But if you have to go slightly or lower down, I would just stick to a Canara Bank and BOB. I think both these stocks have great medium-term setups and can do exceedingly well, but don't go below that. I think some of the other smaller speculative names, I think should just be ignored and stick to these top three.
Okay. All right. Next is the question from Mr. Shah, and he wants you to answer Lal Path Labs. What is the way forward and what should investors do?
See, this entire diagnostic space seems to have lost its way to some extent because, the fall has been mammoth in the last 8 to 9 months. However, they could be basing out. We keep hearing very good things about Lal Path Labs and some of the other names like Metropolis, Fortis. They have been doing well. But I think, as I've said earlier, the pharma and diagnostic theme hasn't done as well in the recent market recovery, which I think is a point of concern. So my focus area is not them. I mean, if you're a long-term investor, you could consider them because they are available at very good prices after this large 9-month-long correction. But from a short-term, medium-term perspective, I don't think it's exciting enough.
Okay, all right. Moving on to our next query, and this is from Rajesh Rajagopal. He wants to ask if KPIT Tech is a buy at current levels. Good momentum seen in IT stocks actually yesterday was a very strong rally, and even if we look at KPIT Tech specifically, good momentum last 2 months from 450 levels to now I think 560, 565 is where it shut shop yesterday. So what's the way forward and should one buy?
See, IT looks great. I think this fall was a little overdone in the last 8 to 9 months. Many stocks have recovered very well in the last 2.5 weeks. I think there could be outperformance returning. And even if the Nifty were to go through some correction, I think IT will stand out. The top names we continue to like, whether it's a TCS, Infosys or a Wipro. So that should be in every investor's basket. But if you want to go lower down in the, the mid-cap IT, Capit is definitely a buy. I think it's setting up very well, great fundamentals, good charts, doing all the right things. I think the fall was again a little overdone and there is scope for a large recovery from here. So yes, Capit I think is right up there along with in Happiest Minds, something that we recommended recently and we continue to like it.
Okay. Any of these larger names as well in the IT space that look interesting?
See, Infosys has already run up a lot from the recent lows. So I'm not very sure whether it has the best risk reward. But I think TCS, HCL Tech and Wipro, I think all three look very interesting even at these prices. I mean, look at the kind of damage that Wipro went through in the last 9 months with no real change in fundamentals. So it's just amazing, how trends can change. But as I said, from a risk reward perspective, these three names, Wipro, HCL Tech and TCS, make a lot of sense.
Okay. How are you reading into gas stocks? Some of these names have run up quite a bit of late. Specifically, if we look at Gujarat Gas, one of our viewers has also posted a comment and he wants your view on this particular counter. Sagar has written to us. Gujarat Gas, good momentum seen, but I'd say last 2 months largely... actually last 1 month largely flattish returns, but going forward do you expect this sort of momentum to sort of escalate?
Well, I'm not a big fan of these gas stocks. I think they have been underperforming on the bigger scale. Honestly, I don't have the chart in mind, so I don't have a direct view available. But if you really look at the NSE Energy Index, I think that seems to have broken out in the last 4 to 5 days, and it's led by Reliance Industries. So if at all you want to play something in energy, let it be Reliance. I think it's the big boy. It's been underperforming, and now it's coming back. And I think there is a very good chance of Reliance gradually moving towards 3,000 at some point of time. So, stay away from these underperformers, stick to the big boys.
Okay, well, that's some good advice coming in. If you want to play the energy theme, big boys is the way to go. Okay, next query is on Hero MotoCorp, and this is from Gayatri Gopal. Hero MotoCorp, very, very exciting momentum seen here. Most of these auto companies have done very well, like you already, highlighted earlier on in the show. From 2450 levels, those June lows that it hit, very smart recovery, almost close to 3,000, 2914 exactly to be precise, is where it's perched at right now. Do you think it's a good idea to enter at these levels, or should one wait for some cool off and then consider adding?
See, despite the recent recovery, Hero Moto remains an underperformer in the overall scheme of things. Somehow we tend to get attracted to these underperformers because they haven't done as well. So people feel that maybe there is a bigger opportunity. But I think in today's market, you need to stick to the winners. So I'm still focusing on an M&M, Tata Motors and a Maruti. I think they have far greater potential. I would stay away from an Escorts and an Ashok Leyland. But coming to Hero Moto, I think the price action of the last 3 or 4 days has been very encouraging. And it does seem that there is a trading opportunity. So a 10 to 12% up move is possible in the near term. So there is a trade. But will I be recommending an investment in Hero Moto? Maybe not, because I think there are better picks.
Okay, all right. What about power stocks? I mean, you just spoke about the energy plays. Karthik has written to us and wants your view on some of these power sector names. Any name that stands out?
Not at this point, Karunya. Only reason being last year, power was in a massive, uptrend. First half of last year, we've seen what Tata Power has done. It was the poster boy name in the power space all along. And now they just seem to have got into a sort of a range. They've got into a time consolidation phase. So I would stay away from power because I don't think it's going to move in sync with the Nifty. I want to stay with autos, FMCG, capital goods, which I think is the bigger theme which is in play and offers far greater opportunities. So all those stocks, which did so well in the last 2 years, might not do well over the next 6 to 12 months. And I think your viewers might need to just keep that in mind.
Okay, all right. Let's talk about Welspun Corp. Dilip has written to us. He bought it at 223 and wants you to tell him whether to exit or hold. He hasn't made much money there because the stock is still hovering around those 225, 227 levels. Tell us, what will be your advice?
So Welspun Corp, I believe, has done well in the recent past. I think it's seen a good run-up in the last few weeks, and there is scope for some more recovery. I don't have precise levels in mind at this point, but I think there is scope for much more upside, and therefore I guess he could just hold on to it.
Since we're talking about the metals pack, want you to address JSW Steel. Paul has written to us and wants your view there. How is JSW looking, or any other names perhaps from the metal universe which looks set for a good run up?
We are not focusing on metals because I don't think metals is going to make a new life high anytime soon. It was in a massive uptrend for a couple of years. Thereafter, we saw this big fall and this recovery in the last 6 weeks. They've already run up a lot. JSW Steel is a great story portfolio stock if you have a 1 to 3 year view. But if you're looking at a 3 to 6 month perspective, again, as I said earlier, I want to stick to other sectors in the market. I think pharma and metals, consumer durables, they have been underperformers and they might not do anything special. Any market correction and metals will come back in. So it's better to just stay away right now.
All right. Okay. What about HPCL? Shakti has written to us and wants your advice on HPCL. Good 50-60 rupees added on this counter last 2 months. There's been a one-way up move. Will that continue?
I don't think so. I'm just amazed how people get attracted to the underperformers in each of the sectors because HPBP have been off our radar for a while now. I want to really concentrate on a Coal India, which is the top constituent of the PSC index, and it's, I believe, trading at a 52-week high. I think Coal India has far more potential than the HPs and BPs of the world. So I would like to stick to them.
All right, Gautam. Great chatting with you, and thank you so much for sharing your views, your picks, and your strategies with our viewers as well. It's always a pleasure to have you on board. With that, we're going to wrap it up right here on Morning Trade. Thank you so much for watching, but stay tuned to Money Control. Markets with Santo and CJ comes up next.